What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon.
I understand that there are power lines that are getting kind of close.
What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
Today, I'm seeing double. I got Susana and Susy. How you doing today?
Good, how are you?
Good, hi.
I'm fantastic. So not only do I have the two of you, but I got great news for you. Today, we are joined by my very favorite audience member. And why is my favorite audience member here as well? Well, this is a chance encounter where I interview commercial real estate syndicators, investors, buyers, sellers, all that kind of stuff. Now, why would I bother making a show about this? Well, if you've ever heard of off-market deals, they're also called private deals or sometimes 506B deals, then you'll know that you're not allowed to share them with other people unless you have a documented prior substantive relationship, because that's what the SEC requires when you do these sorts of deals. So I have people on and I find out what's their level of sophistication, appetite for risk, core competency that they're looking to contribute. And the beautiful thing for you is you get to learn how to effectively communicate on the subject of commercial real estate and how my guests fit into deals. But before we get too excited about business, Susy, Susana, I don't know if you both want to answer, but do you guys want to say a thing or two about yourself first?
Yeah, sure. So I'm Susie. This is my mom.
Susana.
We're a mother-daughter multifamily investment duo down here in Mesa, Arizona. We're just also holding our real estate agent licenses here, and I'm also a nurse.
And I'm a mother of two and now a grandmother.
Yeah,
All
so
right, good stuff, good stuff. So that brings us it brings us to the distinct motivations here, which may have the answers all baked in already. But before that, I gotta say, but wait, check your eight. I think this is more for Susie because this is a technology thing. You're younger, so I assume you're better with it. Maybe you can look through the camera and into the user's device, because down there might be this hideous subscribe button, and maybe they should, okay, it's a stupid joke, but anyway, I do it in every show. The five distinct motivations. I've spoken to all sorts of different commercial real estate players, buyers, sellers, investors, brokers, all that kind of stuff. And one of the things that's super important is to figure out why my guest is going to follow through with these deals. After all, a commercial real estate deal, it takes months just to close. There's all sorts of risks involved. And so there needs to be something there that's going to keep them going month after month when things don't go their way. And here I found these five different motivations. They cover it pretty well. People fit pretty neatly into these categories. The first one of which is preservation of purchasing power. What on earth is that? Well, if you've already got a portfolio of assets and the way that you make ends meet is from the proceeds of ownership, well, you don't really need to make new acquisitions in theory until either inflation rears its ugly head and it eats away from the purchasing power from the cash flow, or if you can buy at a steep discount, like when there's distress or an asset crash, that is when somebody in this position is going to make their next acquisition. That's not where I am. What I'm all about is trading time directly for wealth. And that comes directly from the fact that I owned a CRM agency, which is for mass emailing your list if you have hundreds of thousands of people on there and you need to let them know what you're up to. Also, it was for collecting credit card transactions to sell different things online. But as I was doing that, especially since 2014, in 2014, I started working for a guy in Ohio who was flipping 10 houses a month. And I saw what I was paying in tax was higher than anybody else. And so I was like, well, how do I be more like my boss and pivot to where I'm being rewarded in the form of deployed capital, AKA equity? So that's why I'm doing it, but that's a little bit too abstract for some people. especially youngsters, they tend to be more interested in taking control of their schedule, having that freedom to make their own choices throughout their week. And maybe that means work fewer months per year or fewer weeks per month or something like that. But the idea of someone who wants to take control of their schedule is they eventually want to dial it back a little bit. So that's a great reason to get involved, because you're going to hustle up front. But the people who are never going to stop hustling, they're going to hustle into their 90s. They're driven by ambition. They are after that generational wealth to make sure that their great grandchildren never have to hold a day job. It's just pure ambition, buying up their hometown. That's what they're up to, and that's great for the team because they're going to stick around. Whereas the last group, they're similar to that previous one in that they're going to be similarly motivated, but the focus of their motivation is going to be different. Maybe they picked a sector of society, maybe it's the environment, maybe it's animals, but they decided they wanted to make a big difference, and they found out, hey, there's a big financial component to that. So that's why they're making their commercial acquisitions. So Susana, Susy, of those 5 different motivations, what combination of those describe you guys best?
I think it's fast track to retirement and being able to help others.
Mm-hmm.
Yeah, definitely. So we just kind of want to, buy back our freedom and be able to kind of live life so that we're kind of passionately and purposefully doing things to help others along the way.
Mm-hmm, mm-hmm. I love that. I love that. Especially, you mentioned being a registered nurse, the hours are just insane for that sort of thing. So that makes lots of sense. But the next question is a tolerance for risk assessment. And if you've ever been involved in a 506B deal, then whoever the securities attorney was in the fold, as far as with the issuer goes, they will have insisted that you filled out this questionnaire. So they have that documentation with all these different invasive financial questions. Basically, the syndicator is going to know more about your financial situation than you may know about your own parents' financial situation. But as I went through that questionnaire and figured out what they were up to, there was one question that stood out to me as far as I don't think it served the purpose that it really ought to, which is to really see that somebody understands the risks involved in a commercial investment. And so what I put together is this fill in the blanks question. There are many popular investment asset classes, but I think blank is too risky. So Susana, Susy, it can be inside real estate, it can be outside real estate. What's too risky for you two?
What, Bitcoin?
Probably, yeah, like cryptocurrency, we don't really know enough about it. So I think if we knew a little bit more, it would be different. But just because it's kind of, from what it seems, pretty volatile sometimes, and we don't know enough, we would probably choose crypto.
Fair enough, and it doesn't provide a roof over anybody's head, and you can't eat them. You can't just gobble them up.
Just like that.
Like a subscribe sandwich. Just that thing just kills me, right? But that's my reminder to myself to pull out the Dan Does Deals Core Commercial Competency Cube, and you can get your own copy for free from dandoesdeals.com. And like a complete dummy, I committed the cardinal sin of marketing, which is you should never give your freebie away without getting people's contact information. But for me, it's really important that you end up learning how to effectively communicate on the subject of commercial real estate. And this die has the 6 different roles. So you'll see how my guest fits into these deals as well. And in every episode, I take 2 minutes and I go through and explain all of them. So you'll be sure to improve on that part. So let's talk about repositioners first. A repositioner is an acquisitions person. So they're looking at a whole whack of different properties, and then they're doing a bunch of paperwork. What's that paperwork, you may ask? Anyway, the paperwork is, there's a fancy word for it. It's called underwriting. And what that means is they're doing the math, they're doing the arithmetic, and they're figuring out, first of all, is this property even making the amount of money that the seller or broker claims it is? Because so you have to underwrite it. You have to figure out, like, really the namesake of a repositioner is figuring out how you can change how the property is run so that there's more upside. And there are a bunch of ways they can do it. The most unconventional or unintuitive way that they can make more profit come up is by having a great big financier network, a bunch of investors, and doing those investor relations with all these different lenders. A financier is somebody who only deals with paper and money, so they're not on what's called the GP team, so they're not actually doing any asset management. a bit tongue-tied today. Anyway, they're not doing any asset management, so they can't be on the GP team. They're only dealing with paper and money. But the reason why repositioners have to have a vast network of financiers is because if they can secure a more advantageous loan, that goes straight to the profitability of the building. So that is why the financiers are so pivotal in there. But the next place the repositioner is going to look is the operations team to see if they can get those Benjamins to stop going down the toilet. But of course, there's a lot more to operations than just making sure that the toilets are unclogged and mowing lawns and collecting rent. Me personally, what I added on top of the asset management piece of the puzzle is if there's a vacancy rate problem, even if you have 100 units or more and you outsource to a third-party property management company, if there is a vacancy rate problem, somebody on the GP team needs to have some serious marketing chops to fix that up. And then also with the mass marketing, the emailing and automation, inventory tracking, all that kind of stuff from programming, that's the other part where I contribute to operations. But because commercial real estate is a very mature industry, there's probably not that much you can do as far as operations to make it run more efficiently. So the repositioner will frequently get a contractor team involved to do a value add to upgrade those units so that the next resident will be more than happy to pay more than the previous one did because it's a nicer place. But of course, if only it were that simple. There are all sorts of ways you can spend money on contractors where you'll never make any return on your investment, like if you're gold plating your toilets. So you got to make sure that that doesn't happen. You got to make sure that they're finishing on time. You make sure that they're not using substandard parts. And if you have the same problem that I do, see, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because that sure won't be me. I'd still be stuck at an airport in an hour or two. So I need to rely on people who are nearby because that's such a pivotal part of how a business is run. But when the repositioner has assembled this team and they've got this property in mind, they'll turn around to the financiers and they'll say, hey, I got this great property in mind here. It's 350 units. It's tens of millions of dollars. And I was just thinking, you don't have, I don't know, tens of millions of dollars you want to lend us, do you? Well, the financier is going to have one question on their mind that I haven't addressed yet. And a lot of coaching programs, a lot of gurus, they really gloss over this next one. So listen carefully. They're going to ask, who's your sponsor? Who's your KP? What's that all about? Well, it's best explained with a hypothetical. So let's say you're a physician or an engineer or an attorney or something like that, and you get the idea in your head, hey, why don't we all put in, 100K or however much, and we take over that great big commercial real estate building that's nearby, this apartment complex or whatever. Well, when you get to the bank, the flaw in your plan is to be eligible for a commercial loan, somebody in the fold needs to already own a similar asset. So that means if you want to pick up a 350 unit apartment complex, somebody on your team has to already own a 350 unit apartment complex. On top of that, among the team, you need to put together some liquidity, and then you also need a balance sheet of at least the amount of the loan. But if you have all those pieces, you've got yourself a commercial real estate deal. So Susy, Susana, as far as those different pieces of the puzzle, I imagine you're doing some sort of repositioning, and then every repositioner has to have investor relations. But where do you see you guys fitting into these deals?
Well, you said it just right. And first of all, I want to say that's an awesome toilet. I'm hoping it's not gold plated. But yeah, so definitely we would probably say more so on the repositioner side. So again, underwriting, due diligence. We'd also probably be on the local side because we like to focus on the Phoenix market. So a little bit of that. And then financier, we like to capital raise ourselves and form connections with that, people that can help us get those tens and millions of dollars. So yeah, I guess that would be more so repositioner.
All right. I love it. I love it. And then the next question then is about the buy box. And when commercial real estate players are saying, hey, what you looking for? What's your ideal property? What's easier to say yes to and more difficult to say no to? We're really asking for three things. First one's geography. Where is it? Which states, which counties, possibly even which neighborhood, okay? It's absolutely going to matter before it's called ideal. The second one is size. And most of my guests on this show, they're in multifamily, which means apartment complexes. And the way you define size in an apartment complex is by unit count. And the reason why that's so important is because you have a completely different kind of group that takes over 8-unit apartment complexes compared to the 150s and up. So that size is going to matter. You absolutely need to know that. But the third one is called class. I also sometimes call it desirability. And the reason for that is because class, they split it into two completely different meanings, and that's kind of a pet peeve of mine. The first one is condition, and the second one is area. So if you're talking about condition, we're talking about how old is the building, how beat up is the building, and then of course, as far as amenities and luxuries, is it like really, really a fantastic place to live, or is it kind of no frills, just a working class housing sort of thing? That's the condition. But when you're talking about area, you're talking about what's the crime rate like where the property is located? How are the schools nearby where the property is located? And then of course, there's the old trope of location, location, location. But what they really mean is traffic, traffic, traffic. We're talking about desirability, and it's more desirable if more people are passing by that area on any given day, and that adds to that. But both the area and the condition, they're ranked the same way as in grade school, where you've got A plus at the top, and then A minus, and B plus, and so on. So Susana, Susie, what's easier for you guys to say yes to and more difficult to say no to?
So it would be the Phoenix market area, 1980s and above, 50 plus units, minus C to minus B properties in B areas, where there's a, excuse me, where there's a path of progress.
Yep, I love it. I love it. That was a great summary. So the next question then has to do with people. My favorite thing about commercial real estate is that because it's multifaceted, nobody's going to be all of the sides of the die for any meaningful amount of time. And even though we are super eager to build new teams, give referrals, all that sort of thing, at the end of the day, our skill set to some degree is going to dictate who we're best suited to help. And me personally, because of the stuff on the internet, and then also the mass marketing and technology, the web funnels and applications, the sponsors and KPs are who I'm usually most eager to speak to, because they've already got a business foundation that a person like me can make a disproportionately large difference. Whereas when you're first starting off as a repositioner, you need grunts who can put in 80 hours a week, and that's not going to be me. But of course, I'm also very eager to meet different locals and repositioners, just simply because I'm from the internet. But Susana, Susie, if you have any 506B deals that are active, then don't mention those deals. But it's still okay to say that you're looking for financiers. But I don't want to put words in your mouth. Who are you guys best suited to help?
So we would probably definitely say we like, talking to new investors, and just sponsors, honestly. And we also like to still continually make connections with brokers in the area. So that would be the people that we would ideally, want to connect with and continue to help. So that'd be my answer.
All right, I love it. I love it. And then, so if that's you, the question is probably, well, how do we reach out then? And me personally, I'm easy to find just because I got this distinct last name. And so on LinkedIn, that's the easiest spot to find me. That's where I spend most of my social media time. But if you scan this QR code with your phone, that goes to the FAQs page of 506BME, which is where I offer the service of helping you document your substantive relations for your 506B deals. The main idea is that's what the SEC requires, that they need some sort of proof that you were actually getting to know people, finding out their level of sophistication, appetite for risk, and whatnot before you were pitching your deals, because you're not allowed to pitch your private deals to people who you don't already know and have proof of. But Susana, Susie, what are the best ways to reach out? Is there a website, or is it through social media, email, phone? How should they reach out?
Yeah, definitely. So we have a lot of ways that you can reach out. So we have our website, elitelegacymultifamily.com. We're on Facebook, LinkedIn, Instagram. Reach out at any time.
All right, beautiful, beautiful. So that brings me to the last thing. It's actually not for you two, it's for you in the audience. It's my public service announcement. If you've been watching this episode and you've been experiencing searing pains in your eyeballs and like migraine like symptoms, I'm confident it's due to the hideous subscribe button that's down there, and you can get rid of it for free. You just click on it, it costs you nothing. And I'm eager to get people to do it, because if enough people click the subscribe button, then YouTube will actually start to pay for these videos instead of me. And I think that would be amazing. The trade-off for you, just so we're clear, my videos might show up on your list of suggestions, but you can feel free to ignore those suggestions, because I just really appreciate the fact that you spent this time with me. Just like Susana and Susy, thanks for joining me. This has been great getting to know you guys a little bit better.
Yeah,
Thank you.
absolutely. Thank you. And
for having
subscribe.
us.
Subscribe to Dan.
Thank you. Thank you very much.
Thank you.
Awesome, thanks. Hey there, are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506B or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.